Hi everyone, welcome to DASTCI once again. My name is Diana Olatunde, and today we want to talk about trading using time frames. Now, I noticed that some traders usually have difficulties making profits from the crypto space because they do not utilize time frames as regards entry. Now, we do understand that there needs to be certain objective rules that needs to be met before you enter a trade. So it's quite important for you to also understand that your entry point also plays a great role on whether you become a profitable trader or you start encountering quite a number of losses. Now, we want to explain why these time frames are important and the ways in which you can use them. Now, you can use time frames, let's say, for example, when you're trying to understand the moving average for a particular trading pair. I'm on the BTC/BUSD trading pair right now. But let's say, for example, I want to trade this double top right here. We have a legitimate double top right here that has actually crossed the neckline. And so a downward trend in price was apparently imminent. Okay, but how do you make profits from trading this double top using a time frame? Now, if you were to use this 1 hour time frame on in which we are in right now, you will discover that you most likely won't enter this trade until right about here, where you have um where you have this red candlestick, because that is where you have a full break of the neckline of the double top, which you should understand. I mean, this video is not allowed to trade double tops, but I'm just using this to explain how to trade using time frames. So if you were to enter this trade around here, that means you'll be entering at this price of $24,591 thereabouts. But now let's say I want to enter this trade earlier and I wanted to make a quick a more robust form of profit from it. I might as well just go down the time frame, which will be the 15-minute time frame, and scroll to where I have the double top imminent, which is somewhere around here. Now, in this place, we have fuller candlestick down here. So what I can do is now this has really shown me that this is going to go down because we have a Fibonacci candlestick here, and this would have been my entry point. My entry point would have been on $25,000 as opposed to the 24,900 whatsoever we were seeing there. Because once you have this kind of candlestick pattern already, you already know that this is going to lead to a downtrend because you have this candlestick pattern at the top part of a double top. Okay, so this would have been my own entry, and so I would have made all these profits down to this particular point that we are right now. And that is the power of using time frames to trade, because on the lower time frame you already know what is happening presently in real time, as opposed to when you're waiting for a whole 1 hour time frame. Now let us look at it upwards. Okay, if we're using the 4 hour time frame for this particular trade, you can see that the double top here, the double top that we have here, we are not crossing the neckline. We have not even yet crossed the neckline at all. Isn't that funny, guys? We've not crossed the neckline at all for this double top that we're seeing here. Although this particular part where I'm showing you this video is supposed to lead to a breakout pattern, but we had a reversal. So this double top seems to be taking effect. Now, when we have this double top in the 4 hour time frame, that means that we are not even supposed to have entered this trade if we were waiting for it to cross the neckline, which should be somewhere around here, which is what most traders would wait for, except for those who want to trade it once it is below the bodies, which would be somewhere around here. But if you had just used the 15 minutes time frame or the 1 hour time frame, you would have gotten a more accurate entry period, and by now you'd have already made profit from this whole area. But also do not forget that we are seeing a very good pattern here that can also denote an entry point if you wanted to trade this 4-hour time frame. But we won't go into all those details right now. For people who just understand trading double tops and are waiting to break the neckline on the 4-hour time frame, most traders most often won't have entered this trade. However, if you were trading the 15-minute time frame, you would have seen a very good entry point. So if I'm trading a 1-hour time frame, I use the lower time frame to be able to determine my entry point. If I'm using a 4-hour time frame, I use a 1-hour time frame to be able to determine my entry point. And so it goes on like that. Now, occasionally, sometimes I do check the 30-minute time frame because it helps me understand what the candlesticks are doing more. Okay, so here we have a more defined double top. Okay, so you can see that this is a valid double top, and we have a more defined candlestick pattern here that also helps with denoting the entry as well. So sometimes I use the 30 minutes time frame if I'm not seeing any very good sign in the 15 minutes time frame for an entry, or in the 1-hour time frame for an entry. I just go down to the 30 minutes time frame to try to denote an entry point. And also right now I have my MA here at 25. Most times I use 20 MA, but it depends on the trading pair and the volatility in that period. I might choose to use 50 MA or use the EMA rather to be able to determine when we are going into a downtrend. As you can see right here, this candlestick crossed this 25 MA, and so we've been in a downward trend ever since. Now, some people might want to use the MA to be able to better understand entry points. Using time frames also help you work with that, because if you were to look at this in the 4-hour time frame as well, you would see that we are just crossing this right here, and this is about 24,006 something dollars. That won't be a very good entry point, because some people might want to retest this aspects before they place an entry. So it's very important for you to understand how and when to use these time frames. Let's say, for example, now that we have, it's more evident in the 30 minutes time frame. As you can see, we are in a downtrend presently. It is more glaring and more evident here, and also our entry point was more defined here, and this double top is even more evident in the 30 minutes time frame than what we saw in the 15 minutes time frame. Just look at this. Okay, it's much more evident. So this is one of the ways in which you can use time frames to be able to understand how to enter the market. It's very important you know when to use it, especially if you're using indicators, or if you just want to use candlestick patterns to be able to enter a trade market. Now, I use a combination of both indicators and chart patterns as well, price actions and all of that. Also understanding the volatility period during a certain aspect for me to be able to determine whether this is going to be a good entry point or a good exit point. So that's it for us today, and we look forward to seeing you in the next video. I wish you happy earnings in your trades.